Hey guys, what's up? It's me, Alexander. So, what's the short version of this episode? You are the real reason founders are not funded in the pitch process. Investors invest in the team. That's the main reason founders are turned down. It's not me, it's you. Said no girlfriend ever. You've heard quotes from VCs or venture capitalists diffuse the importance of the team. You know, so many companies fail and so many startups don't get funded. But given the team is so important, it clearly hasn't dawned on many people to put the two and two together and realize the reason startups aren't funded is you, it's your team. And you're never going to hear that answer.
Ask Alex. Ask Alex. Because you don't know what you don't know. And if you don't know, now you know.
Yeah.
This is a quote I like quite a lot. And it's 70% of my investment decision of an early stage company is a team. My rationale is simple. Everything goes wrong. And only great teams can respond to competitors, markets, funding environments, staff departures, PR disasters, and the like. It's one of my favorite bloggers, VC bloggers, Mark Sisler from a VC called Upfront Ventures. And that should be pretty profound to you, and you really quite need to internalize it. Because this is, without a doubt, the dirtiest of laundry. It's the skeleton in the closet. No investor wants to or will ever face up to in public. Now, I say in public because in private, investors talk about it a lot. And I mean a lot. Remember, all investors invest in teams, right? Now, I'm taking on a contentious topic here, but it's better to know than to be constantly fretting about why you may not be getting the cash you need to make your payroll. Your venture capitalist or the venture capitalist's job fundamentally is to say no to you in a pitch process. So think of deal flow as a badge of honor. VCs brag about how much deal flow they get. They might do this in the hope that prospective LPs or limited partners, their investors, right? VCs have investors too, will think they have great proprietary access, that other investors will think, they're popular, or simply that they hear everyone else should get so much and so they should probably say the same thing too. Now that number is typically 1,000 deals a year, maybe more, less. Frankly, I think that's kind of bullshit. I recently read a Series A focused VC recently that they look at 1,000 deals a year. Now, there haven't been 1,000 Series A deals in the whole of Asia, but I digress. But anyway, look, it's a lot anyway, and that's going to vary between regions, but whatever. Now, VCs never quite deal with the nature of the job, which is not being a yes man. The reality is, regardless of how much deal flow a VC gets, it's a VC's job to say no to almost all of it. It is to say no so many times that they get surprised when they actually say yes. Clearly, that's why founders seem to celebrate when they get funded, right? Only when you say no, you have to give a reason, right? And well, therein lies the rub. How do you say no? Are you descriptive or are you not? What happens then if you are, and God forbid, honest? Frankly, for an investor, what's the upside and what's the downside? Now, in the same way doctors don't like saying the patient is DOA or dead on arrival, VCs don't like saying no. Only they got to do it maybe 10, 40 times a day. But getting to know isn't a perfect process in a pitch process. Now, in VC's defense, with all this deal flow, it's hard for a VC to make a perfect call in a 30, 45-minute meeting about the capability of a founder. They have to blink, as Malcolm Gladwell would put it. Regardless of how refined their pattern recognition gets, how high their EQ may be, no one is perfect. So how can we expect them to make a perfect call? VCs do misjudge people, and they do so all the time. The reality is that VCs like to make money, but they really hate to lose money. It's simply easier to say no when things don't kind of feel right. Now, the bar for great founders to raise VC is higher than anything you've experienced. Founders and the team they build make or break a startup. Nothing else really matters. Now, obviously, swimming downstream in a big market, the right timing and solving an awesome problem, customers pay, helps push you forward. But a less talented team will still drown in a great opportunity like kittens in a bag, if that's your kind of fun. Okay, that got a little bit dark. Only, what startup thinks they're one of the 99% of unfundable startups, right? You don't either. So VCs, the liars and the delusional, just like you. The same thing fundamentally applies to VCs actually. If a fund isn't top quartile, they're unlikely to raise the next fund. Only, have you ever heard a VC say that they aren't top quartile? Maybe you're not super in the VC game. I'm just saying no, never. Do you think they'll continue to believe they're above average? Well, of course they do. That's their job. This is the illusory superiority effect. For instance, in a 1977 study, 94% of professors rated themselves above average relative to their peers. In another study, 32% of the employees of a software company said they outperformed better than 19 out of 20 of their colleagues. And research has found that people overestimate how charitable they'll be in future donation drives, but accurately guess their peers' donation. Let's put quite how high the bar for raising funds is compared to other hard things. So, top MBA programs. Acceptance rates into top MBA programs in the US, such as Harvard and Wharton, are pretty low. Graduates and entrants take great pride in that they got into and graduated from these prestigious institutions. Acceptance rates for Harvard, what do you think they are? 11.8%. And for Wharton, 18.7%. Now, let's look at top accelerator programs. Acceptance rates into top accelerators are far lower than MBA programs. The model works by processing as many companies as possible in each batch, so they actively want companies in their program. The acceptance rates in these programs are even lower. For Techstars, it's between 1 and 2%, and Y Combinator is around 2%. Now, VC funding. At Harvard, you're paying them a few hundred K, and they turn you away. They turn applicants away all the time. To get into Harvard for an MBA, you need to be pretty stellar. Like, your background's gonna be pretty great. Like, I'm talking top grades undergrad, work experience at places like Lazard or McKinsey, and don't even get me started with this whole fucking GMAT thing you've got to do. Accelerators put far less capital into a founder than a typical VC does, and they invest in a lot of startups. So what do you think the acceptance rate for a VC should be, taking this into consideration? Where do you think the bar should be set for a VC to commit $1 million, $2 million, $10 million, $100 million? I would think pretty high, right? I mean, my guess is that most founders, being their nature or not, would rather take a bet on funding than getting into Harvard. Now, I've got friends that have tried raising money in Asia and failed, then applied to Y Combinator and got in. I have friends who've tried selling VC-backed startups and then going to Harvard as a backup. Now, this clearly doesn't make sense, and it's probably the reason VCs get more pitches than Harvard gets applications. So, think as this whole thing is a VC game. Now, to get all creepy with the whole, do you want to play a game from like that Saw TV series movie thing? Let's play a game. You earn $1 million in savings over the next 20 years of your life, scraping by, saving every penny. Now, a kid in sneakers rocks up and asks for you to give him all of your savings for an idea he has. Seriously? How do you respond? And what would it take for you to part with all that money that you've spent so long saving up to get? Well, that is a binary, single play game with no alternative options. So let's assume two people pitch you at polar ends of a bell curve in terms of capability with a plausible pitch. Ceteris paribus, or all things being equal, whatever. So we've got person A. Awesome. Track record of excellence and overachievement. Best uni, best internships, top investment bank, being promoted a year early, started companies, sold to Google, got in touch with you by some high profile friends you have that you've got in common. Now, we've got person B. Sucky. Scraped through a third-rate uni or didn't even go, no work experience, now has an idea, his first one ever. And the lucky winner in this pitch process for your $1 million is What do you think? Which one do you want to give your $1 million to? The answer is implicitly rhetorical to any logical person that doesn't hug trees. Now, I invite you to my office, and I have person A and B wait in the reception room. I call on each person individually in succession and have to tell one person you're going to help them achieve their dreams and the other person that you're going to shatter theirs. What are you going to tell person A? What are you going to tell person B? My bet it'll go a little bit something like this. I totally had the opportunity to rhyme that. Anyway, person A. You're awesome. I love your idea. I want to work with you. Let's do it, baby. Person B. So I discussed it and I don't feel it's right for me right now. I don't feel the market's big enough. The timing isn't quite right. It just isn't an area that I feel comfortable with. I wish you the best. Let's just be friends. Right? This is exactly the reason no investor will ever tell you no for the real reason. It sucks, to be honest. It sucks to say no. So, why do logical VCs give a nice reason for no, or actually don't even give any reason at all in this pitch process? Now, let's assume you've got $2 million now, and you get to make 2 investments at any point in time that you like. Would you give $1 million to person B as well? Well, probably not, right? But if you're an avid reader and understand game theory and option pricing theory, you know the value of options and waiting for more information. At this point in time, with information you have, with your read of the team, you don't want to give the cash to person B. But what happens if you read person B wrong in your short meeting and in 6 months' time, they start growing like slack, knocking it out of the park? Fuck, crap. You said no, and you told the founder you thought they weren't capable as a person. And frankly, you can't go back and try to get them back in the deal. That would just be like way too awkward. But wait, you didn't tell the founder you think he doesn't cut it. You spin him some bullshit answer that allows you to come back to him in 6 months' time in order to get back into that deal. Boom, bitches, right? Investors will never tell a founder they aren't AAA, as it is logical in terms of game theory and holding optionality. They say no now, but create an option to invest in the future again when the time has moved on and there is more information. The investor has the option to call and buy into the founder again, albeit potentially at a slightly different valuation. But hey, cool beans. So, different approach to saying no. Being honest, but selectively. Now, I would never tell a founder they aren't great, at least intentionally, though some may take it thusly. I'll give harsh feedback about things they can improve on personally, such as reading up on certain things or how they're approaching things is completely wrong, and if they did X, they might have more success. There's frankly no point in telling a horse they aren't a zebra, as they can't remove the stripes, meaning like they're stupid, they're not smart. But you can teach a horse how to drink from the water, meaning learn how to ride a pitch deck. Now, I will provide real and actual feedback, assuming the founder appears to be receptive to listening and learning. Why? Because if the founder takes it on board, they're the kind of person I would like to work with. It's basically a pre-selection process, as I believe the best founders take every insight as an option to improve their business. Note, as a founder, you need to be a filter and not a sponge with this advice. Now, continuing on. I might invest in those founders if, they fix whatever I thought didn't work and they improve, meaning like become investable finally. Now, the founder, assuming my feedback actually makes sense, and well, I think it does and not that frequently wrong, has the potential to not waste the time and be more successful, which is important to me since I know how hard startup is, being a founder myself. Now, almost no other investor keeps it real, and I believe that founders recognize that fact. To illustrate this point, I received an email from a founder that got back in touch with me after a first meeting a few months later that kind of started to wait a little bit like this. Hey Alexander, I created this for investors who I'm in talks with currently. I thought I should reach out to you guys since you gave me a genuine reason for a no in the past and not some random bullshit. Below is a quick update on our current status. Blah, blah. Whether I like the founder's startup is irrelevant. I simply love this founder because he simply got it. It also reiterates the point of this post that the vast majority of VCs do not give real feedback to founders in a pitch process. I typically read all the content on the internet of the blogs, right? Like, I'm writing to ensure what I put up is actually real value add. Now, I found a comment on the whole one related articles of this topic I could find from about 6 years ago that supports my position from this guy. It's actually quite a good blogger called Jeff Busgang, also a VC. If it's the team, I think you should say so. My last startup failed to make waves. It was the team. I think some of the investors that turned us down before we got a small VC investment did so because of the team. Only later did I learn via a third party that was one of the reasons at least one investor passed. But no one told us that. We learned the hard way after blowing through a lot of money and wasting a lot of time and energy. Please tell entrepreneurs, if it's the team, guys, this is a pass from us. We just don't think the team's right. You can go into detail, experience, team dynamic, whatever, but sometimes it takes outside voices to point out what you think would be obvious to a dysfunctional founding team. An early stage team is something that can be addressed. There's always one founder, possibly two, that will take that and fix it, even if it means another founder gets a bruised ego. The reality founders should face, which make them rich, possibly, most founders should instead be employees, early ones. An investable founding per se could be an amazing employee though. The first 100 employees of Facebook will make more money than CEOs of 99% of most startups. Secretaries of some firms that go public make more than $1 million, which is more than most founders can claim to ever get to make. When I was a junior banker, one of our clients was fond of saying this: I have made the most millionaires in the city of London. He was clearly talking about employees. Now, what Asia needs is not more average startups, but more exceptional ones that can really make us proud. That means the average quality needs to be higher. Now, the conclusion on this topic of why founders are not funded is you wouldn't give person B $1 million of your hard-earned cash, and you wouldn't tell them the AAA. So why would you think an investor wouldn't approach the pitch process either? There's just no upside in VCs being overly honest about a founder or startups, the shortcomings, the failings, unless that is their brand. They comprehend the logic, or my logic, and actually care about founders. But more than anything, no VC will ever say, it's you. But really, it is you. As we start this blog, 70% of the investment decision is my team or the team, which implies 70% of the time, a VC says no because of the team, aka you. Investing in a startup and founders is fundamentally a matter of conviction and seeing something no other investor sees. Now, I think this story is telling. A founder pitches 30 VCs and 29 pass. One says yes. The founder thinks that one VC is brilliant and the other 29 VCs think he's an idiot. That's an interesting thing to lament on. That one VC is an idiot in social circles until that founder proves them all wrong on behalf of that one lone wolf VC. But the funny thing is, a successful VC has to be both right and non-consensus. So what their peers think shouldn't matter. Respectfully speaking, if you as a founder are not cut out for the job, the only thing you can do about it is join another startup. And really, if you pick the right business, you might do very well out of it. In Silicon Valley, developers make millions by jumping on the right ship at the right time and rising with the sea. Well, okay, at least that's what some guys in a bar in Palo Alto told me. What do I know? I don't live in America. But VCs want and have to do great deals. If they think you're the prom queen, They're going to chase you down. So if you haven't heard back from the investor, don't take it personally. Chances are it's only you that are the reason that your startup's not funded. It's just how the pitch process works. Now, I hope that doesn't unmotivate you, make you feel bad. I'm just putting it out there that what is a great startup? It's just a company with a bunch of awesome people. And your company is only as awesome as the people you have. And that company starts with the people that found it, right? It's only going to go down from there. Like crappy people are not going to get AAA people unless you pay crazy ass salaries, but you're not going to get that money unless you get there. So think critically about things, right? If you're having a tough time fundraising, it could just be your team. So look around. Did you found a company with the best people you possibly could? And if maybe you didn't, maybe the startup's not going to work. Maybe you should just join another company. Maybe you'll make out like a bandit there. I hope they give you something to think about. If it was useful, like, share, subscribe, all that cool stuff. And I'll see you in the next video, guys. Bye.